I think looking at certainly the tax situation in France has certainly a little bit become difficult for most investors, but not only for the investors, but also for those people who would like to disinvest and dispose of their assets, because we are now going to tax-even transactions where shares of foreign companies are sold in Luxembourg, for example. The French state is going after that and try to get their stamp duty on the sale of, for example, shares in a Luxembourg CFAP or CeGeReal or something like that. So I think that has been a little bit a drawback, because structuring transactions with structures a little bit more complicated has come a little bit out of practice. People are not so interested anymore in huge structuring. So that is something we see. People are certainly also looking about the unemployment rate in France, talking about industry, which has a negative growth in 2012, not knowing exactly where the growth is coming from for 2013, but 2014 everybody is predicting that growth is coming back. And therefore we see a number of private equity investors doing joint ventures, for example, with people who are just raising new office buildings in the right area in Paris and surround the Paris area, coming to the market in 2015, 2016. So I think there's something where people are strategically looking into the market, saying, yes, we are certainly not get out of a big hole, but in 2 to 3 years' time, we think that there is a market also, industry coming back, and so far we have a perspective of 2 or 3 years. And it might be that people are very courageous, saying we can pick up prime locations for rent, but we can also pick up secondary locations simply to see how we can transform it, as Luc also already said in his presentation, to be able to turn it into a green building and then to get it really replaced in the market. That is something which is on the forefront of a number of people I know in the market. And then you see a number of people coming in simply saying we get to have a balance in our portfolio. So we have also to have a little bit of Paris in our asset class, in our portfolio. And there's still a lot of money around, and insurance companies are effectively very active in the French market. We have seen the spread between the government bonds and real estate performance. The spread is 2.5%, when I saw the picture right. That does mean that the potential acquirer of government bonds in the past years, insurance companies, for their regulatory capital, they are now turning their mind a little bit more to real estate. They get an allocation to real estate which is much larger, and so far we get new players in the field. And I think that is what we see. I think, yes, the current situation, the picture which was taken by the presentation of Luc is not fantastic, but looking 2 years down the road, I think Paris will be back again somewhere, and people are anticipating that.
Talking about the French market and this potential political issue, to my standpoint, there are not so many political issues which is now written in the stone. There are a lot of fears, but there are not so much change compared to what exists over the past 10 years. I think that what is quite important is that it's a strong invitation to come back to a longer-term investment. And as you can see, for the investment ranging between 100 and 200 million euros, last year there was 20 transactions of this kind. 17 have been done by insurance and French institutional. They are long-term player, cash risk, and so they could afford to have some kind of political risk, but on the long term, which is finally the natural term normally for real estate and not for tax, maybe optimized structure, but for real estate itself, it's okay. It's a good product.